Hello, everybody, and welcome to today's session. Now, I've met presidents, I've met government ministers, I've been to places in Africa. If I disappeared, nobody would even begin to know where to start looking for me. But I tell you that I'm more nervous doing this webinar than any of those experiences. This is my first webinar, so please just bear with me, and hopefully we can all learn something from today's session.
Morning.
Question.
Hello, good morning.
How confident are you in your ability to make informed business decisions based on your current financial data? I think that's going to be the theme throughout the session. And hopefully by the end of the session, you can start to view your business from a fresh perspective and recognize why data is actually the backbone of your organization and that the financial statements are generated from that data. So we'll try through the discussion topics. I'll take you through the business life cycle, identify and try and explain in very basic, simple terms, the key financial information, your challenges, the consequences, the benefits, and try and be practical in this session as much as possible that you can take away certain key elements. And we'll bring it all together by talking about cloud-based accounting. Sure, you've all heard this saying before in the business world, but I think let's actually look at this and think about it slightly differently. There should be no emotions in making strategic business decisions. You can't be vain about having sales. Sales is the absolute backbone of your business. If you don't have sales, you don't have anything else. You might as well close your doors. So it's imperative to focus on sales and grow your sales. Once you've got the data and understand what products are working and what products are not working for you, you can adjust it. But without that element of sales coming into your business, you might as well shut your doors. Then the next saying here is profit is sanity. Well, actually, the truth is, if you're not making profit in your business, again, you might as well close your doors. So it's not a question of emotion of whether you say maybe you're a bit insane if you continue chasing a business where it's not going to turn profit. So again, profit is part and parcel of why you actually are in business. And again, everybody then talks about cash is reality. Sure, cash is super important to pay your monthly expenses. Come month end, you've got to make sure that you put cash away to pay your salaries, to pay your rent. You can't turn around to your staff at the end of the month and say, listen, can't pay you this week. I'm just waiting for so-and-so to pay me, and then I'll pay you. So important to manage the cash flow to ensure that you've got cash in the bank to pay the fixed monthly overheads. Also, it's not necessarily right to say that your business is super profitable if you've got money in the bank. If you are sitting with excess money in the bank, you might actually not be utilizing that cash correctly. I call it lazy money. So it should either be reinvested back into the business to grow your business, or as SME business owners, take the money out the business and invest it elsewhere. So I think all three elements actually work together in forming the financial information for a successful business. They can't work independent of one another. And every single transaction that gets processed is recorded. And that transaction recorded is called data. And data provides the unemotional truth about your business and your business performance. It informs you to make key decisions, identifies areas for improvement, and is measurable, which is very important. You need to have a track record to measure any of your initiatives or anything that you do. How is it performed? Now, I'll ask you a question again, just to think about, is what is your actual primary method of tracking your business finances? Is it manual bookkeeping? Is it Excel spreadsheets? Is it possibly accounting software? And I just want to make the point up front now regarding spreadsheets. And a lot of SMEs and a lot of business owners think they're running the business well because they're actually using Excel and they become experts in Excel. Excel is not a robust accounting system. Excel is an excellent reporting tool where you can extract the data from a robust accounting system and analyze and interpret and slice and dice based on the key information that has been put into the system through the various transactions. The transactions are invoices, payments, transactions, bank charges, etc. Any transaction gets recorded, and any transaction can then be measured.
Because catch a recording.
But the key financial information, if we look at it and we try and simplify it, breaking down into an income statement or call it profit and loss, talk about a balance sheet, and we talk about a cash flow statement. Let's just understand the difference between bookkeeping and accounting. Bookkeeping is actually the day-to-day recording of the financial transactions, like your sales, your purchases, your payments. Accounting is a little bit of a broader terminology, which encompasses both the bookkeeping as well as analyzing financial data, preparing financial statements, and providing financial advice. And I'm again hoping that during the session, and when we bring it together at the end with cloud accounting, as an SME, as a non-accountant, as a business owner, with the technology of robust accounting systems today, you can pretty much do the bookkeeping and the accounting yourselves or within your environment and not have to rely on third parties to be able to generate the information for you. Let's go back and talk about the income statements. In very simple terms, the income statement is your sales less everything that has cost you to sell that product. So if you didn't make a sale, would you have incurred that cost of sale? And that distinguishes between a cost relating to the sale or your fixed monthly overheads. They are different. They need to be categorized and they need to be managed and reported on separately. So once you've taken your sales, there's everything that it's cost you to make that sale, you're left with what's called a gross profit. From that gross profit, you then take your fixed expenses. Whether you make a sale or not, you've still got rent to pay. That is what's called operating expenses. Whether you make the sale or not, you have salaries to pay. That's independent of whether you're making the sale and making the gross profit. And you've got to just think and talk a lot more about operating expenses. To me, that's the cancer in the business. It's that small little niggle that just starts to grow and grow and grow over time. As an SME, a couple of years ago, when you started your business, you needed to set your office up. So you go along and you sign a lease, you sign a contract for a cell phone, et cetera, et cetera. And then you forget about it because on a day-to-day basis, you're out there, you're chasing the sales, you're putting out fires all day, you're running around trying to run your business. And you actually then forget about that cell phone contract. We'll use that as an example, that every year there's an escalation. Once it expired, if you're not paying attention to it, it just carries on, as opposed to just stopping, having a look at that expense and saying, actually, things have changed over the last 2 or 3 years. I can do better. And it is so important to manage those small costs, because as your business grows and those costs just start to eat away at your profits, and it's not necessary. You need to have the information measurable and you need to be checking the level of expenditure that's going into your business. I'll give you an example of a terminology which I've implemented in my previous businesses. Sorry, I forgot through all the nervousness. Just very briefly, I'm a chartered accountant by profession. I spent a significant amount of my time traveling Africa, doing business development, starting businesses in a microfinance industry. I have experience prior to that in software, property management software, and accounting software, and most recently in manufacturing and retail. So that's just a bit of background. So going back to the financial services, started a business in financial service business in Mozambique, and that was a greenfield setup. So we had to employ everybody from the senior executives down to the tea lady. And from the very, very beginning, we implemented a cost-cutting culture to the extent that our tea lady would take the serviettes, the 2-ply serviettes, and actually split them into 2. Because she knew, I mean, it sounds ridiculous, but if you actually think about it, she knew that if she can save money on not wasting serviettes, there's more money for her. There's more certainty that she's got a job at the end of the month and at the end of the year. And that's the type of mentality that you want to build in to your staff and into your business. So super, super important part of the business. Next question then I'll ask, if we move on to your business and say, well, what is your business? Are you building an asset or are you building a revenue stream? And there's a big difference between the two. An asset is a business that you'll build up over time. You will grow the profits, you will grow your assets, you will grow your brand, and at some stage in the future, you have an asset that you can then sell for profit. As opposed to, if we use the example of a medical practitioner, very difficult for a medical practitioner to build an asset, because you're going to the doctor based on his name and their reputation. And for no reason, when that practitioner stops operating, that business has gone. So it's up to the practitioner to ensure that he's generating sufficient cash flow out of the business to then go and invest and build his own assets. So always be asking your question, are you building an asset for future sale, or are you just building yourself a salary, a month-to-month income? From a balance sheet, it's as simple as saying, well, it's all my assets, less money, less whoever owe money to, and that's actually your business value. It's as simple as that. It shouldn't be more complicated. And again, if you go back to the description of bookkeeping accounting, it's as simple as taking your assets less your liabilities. From a cash flow perspective, again, very, very important to track and manage the inflow and the outflows. Is different to the income statement, because the difference here would be, in an income statement, you might give credit to your customers. Similarly, your suppliers will give you credit in extended terms. But as I mentioned earlier, you need to have that free cash flow available to cover your monthly fixed expenses, which is different. So you do have a difference between what's sitting there as net profit in your income statement and actually the cash sitting in your bank ready to be deployed to the fixed expenses that you have. Again, as entrepreneurs, we face challenges all day, every day. And I think sitting at the top of the list is our lack of time. If we had time, we could manage our finances better. We could improve we can look at the cost within the business. So time is very, very valuable. And again, if you're not investing sufficient time in the backbone of your business, which is the financial information, you're going to be chasing your tail. Because without having taking off the time to have accurate financial information is not going to assist you in moving your business forward. A lot of people that I interact with, again, they just seem to be they are very scared about accounting and income statements, balance sheets, and fear of their little accounting knowledge. And again, I emphasize that today with the cloud-based accounting software, they are built for non-accountants. You don't need to be an accountant with extended accounting knowledge. If you go back to the definition we spoke about earlier, an accounting is a broader term, which is the bookkeeping, but as well as analyzing your data. It's your data. You'll understand how to analyze it. Preparing financial statements comes straight out of the system. It's nothing for you to do. Big problem is the underestimating of your expenses. And a point would be, let's say an electrician is doing a quote for a job and hasn't got updated financial information, doesn't cost the job correctly, gets the work, and then starts to realize how he underestimated certain expenses, and suddenly the nice profit that he thinks he's going to be making has been reduced significantly because of the underestimating of expenses. And then following on from that is also a common mistake, which is the mistiming of cash flow. You might be having the cash flow, but it might be coming in next week. But actually, yesterday was month end. So you need to be able to manage your cash flow and ensure that you've got the timing right of when you need to pay out that cash flow. SME businesses, startup businesses like us, often believe that this is our business. What's the difference between the money that I'm taking out for the business and actually what's happening in the business? One and the same. It's certainly not one and the same. And you should not be mixing your personal expenditure with your business finances. A business is an entity, a legal entity. It has got obligations to pay tax. It's got fiduciary duties. And any information that you are submitting in terms of a tax return or a VAT return needs to be expenditure in the production of income. Taking your family out for dinner is certainly not in the production of income and should not be drawn out of the business unless it is recorded as drawings or as part of a loan account. Another common mistake that we make, again, a lot could be due to lack of time, is failing to create or to manage a budget. A budget is a plan. You can't go into the year, you can't go into the business without having a bit of a structure, a bit of a plan to work towards, and then having the accurate financial data to actually measure that budget and check in on it. Not at the end of the year and realize how much you've missed it by, but actually to be able to tweak and manage your budgets as you start moving along. And that is, it's never perfect and it's super difficult to get accurate budgeting, but you learn as you move along.
There's a bit.
Please turn off your mics.
Another aspect which is also quite interesting is a lot of companies actually rely on third parties to tell them what their business is doing financially. Now it's crazy. I mean, you go and if you go back to the cost within a business, you can't do your accounting, you're not going to do your book. So what you do is you go and outsource it to a firm of bookkeepers and accountants, and they charge you every month to submit your VAT. Maybe if you're lucky, get your management account sent through to you. But generally, you're going to learn the correct financial information once a year when you sit with your accountant and he basically reads out the income statement to you. That's meaningless. It's too late and it's far too long down the road. You need to have information at your fingertips. It's your business. You should not be waiting on and relying on third parties to provide you with accurate financial information to inform your decision making. The ramifications and consequences of poor financial management, certainly from an overspending perspective. You've got to measure those costs. You've got to measure your cost of sales. You've got to make sure that if you're purchasing at the right price. Because if you're not and you're overpaying for your purchasing or your costs directly related in the sale of that product, your margins are going to go down. And you're never going to be able to recover those until you start doing better pricing and better costing. So ensure that you've actually costed everything correctly. We spoke about cash flow issues earlier, and those can be severe. So plan ahead and make sure you've got the information available to be able to plan for those immediate payments. How many of you actually know whether there's theft or fraud happening within your business? Especially the business that have been around a bit longer. You have, again, let's just take I'll use the bookkeeper as an example to say, well, how do you know that he or she hasn't been skimming off the top for the last couple of years? You look at your financial information once a year, everything kind of looks right, you're a little bit disappointed, but you move on. If you don't have robust internal control systems, processes, and procedures in place with data that tracks it and analyzes it, it's going to be very difficult to proactively pick up any fraud or theft within the business. Most of the thought of fraud or theft that is picked up is actually by luck. The person goes on leave and somebody takes their place, whatever it might be. But if you've got good financial controls, good financial systems, you manage the business by exceptions. You can manage the business by trends. In a retail environment, retail and manufacturing, you've got a whole range of different products that you sell. Obviously, you sell different selling prices, different cost prices, but how do you identify which products in your product range are actually not profitable and should be moved out? Because if you're purely looking at your profits as one number, sales less cost of sales, you don't know the superstars necessarily within your product range, and the products and with the lower GPs that are starting to bring down. So up-to-date real-time data and information certainly helps your decision in your product range and in your pricing. Missing tax deductions and credits. Data is recorded, and we spoke earlier about every transaction becomes data. To then be able to submit accurate financial information for expenditure incurred, directly incurred in the production of income, gets you the correct tax deductions and possible credits because it's available to you immediately. And whether you actually realize it or not, the type of costly mistakes that you make because what you thought is actually not the reality of what the data says. So, you might be thinking that you're doing certainly well on a product until suddenly you actually start to get the numbers and you realize your costing is completely wrong. You've made decisions, you've made strategic decisions based on your Excel spreadsheet type of accounting system, which is potentially very dangerous. We're all looking for funding, we're all looking for partners, we're all looking for some form of cash flow to help us grow the business. So approaching a funder, approaching even a bank for a credit facility, the first thing that they're going to look for and they're going to ask for are your financial statements. They don't know you, they don't know your business, they don't even necessarily know your product. The only thing that they know is a set of accurate financial statements, which is the front door into your business. And from there, you can start to open up and start to explain, well, this is how we operate. These are the different nuances within the business. But if you are trying to attract funding and you don't install that level of confidence with the party that you're dealing with upfront, it's going to be very, very difficult to try and convince an investor or a funder that you actually do know what you're talking about if you don't have the robust financial information and financial controls. There's a huge amount of benefits to keep accurate financial records. I think most importantly is the better understanding of your business. I'll give you an example. I'm working with a chap at the moment. I see he's online, but so what we did is we started to work through his business and take his information that he's running and actually just put it into a more organized manner. So the difference between the direct costs and indirect costs, and took the exact data, but put it into a meaningful manner. And the eureka moment for this chap was when we cleaned and we looked and we analyzed the data. He could see that, are you telling me I need to increase my turnover in this shop by X rands and X volume for me to break even? He didn't have visibility or insight into that previously. Now, with that level of insight and information, he can go and he can start to run, he can look at his more profitable products and start to run specials on them. He can set targets with extra bonuses or commissions to his staff, but at least he knows now from the information what he needs to do to actually start to turn profit. And that's just one example of taking data, cleaning it, using the data to then just make informed decisions. Businesses are fluid these days. There's a lot happening all the time. You need to be in touch and in tune with your numbers all day, every day, specifically when it's coming up for cash flow payments. You need to know who owes you money and who you owe money to. Because if you rely on somebody to pay you by month end and they don't pay you, you're not going to have that cash to pay your staff, the salaries. So with the real-time information, you should be able to follow up very quickly and very easily to chase that money down before you're short of cash at month end to pay for your committed expenses. We spoke on the previous slide about the access to funding and attract investors. Can't stress the importance of that and presenting yourself as a professional, knowledgeable person. You're super knowledgeable about your business. But as I said, the third party can only see the front door at that stage, which are your financial information. Timely submission of VAT and statutory returns. There's no excuse not to be submitting VAT on time. You should never be paying penalties for late submission of VAT returns. Systems today are integrated with SARS. They do the e-filing for you. As long as the data is captured, your VAT returns and your statutory returns are ready. There shouldn't be a need to start balancing, well, how much VAT should I pay and how much VAT should I hold for next month? VAT is not your money. Anything that you deal with in the business is, and you should think and you should talk about excluding VAT. In fact, when you make a sale on the 1st of January, you're actually holding 15% of that sale in your bank account for 2.5 months, because you're only then paying that on the 25th of March. So it's not even your money that you've actually got the luxury of sitting with. And again, with the correct gross profit, you've incurred the expense, which is the money that you would owe for the VAT, but you've sold it for more than you've cost. So the net cash flow is actually sitting with you for that period of time. That's why it's important then to manage your cash flow, to know on the 25th of March, you've got VAT to pay. Because if you don't manage your cash flow, you'll forget that there's VAT coming up, because you forgot about it. You earned that cash on the 1st of January. Identifying trends and areas for improvement has to be done through data. Very, very difficult. And we spoke earlier about there is no emotion about whether you think you've got the best product or service. It doesn't matter unless the data is telling you that you get in the sales. You need to be able to dissect your data. It's got to be easy for you to get to, so you can look at the trends. You can have a look and see, well, for the same expense across all my branches, why is printing and stationery I'm paying more at branch A than branch B? And those are, when it comes to that cost conscious culture, those are the type of analysis that you should be analyzing and looking at within your business all the time. You've heard me say from the beginning of the session, implement a robust accounting system. It is so different today to how systems were a long time ago. Most of these systems today are built and designed for non-accountants. There's no excuse in any business. This is your asset. It's either your income stream or the asset that you build in. You need to invest the time to ensure that you have a best of breed, up-to-date accounting system in place. Once you've got an accounting system, important then to categorize your expenses, to understand which expenses belong where. Anything relating to a sale of a product must be categorized as part of the cost of that sale. Anything that is fixed on a monthly basis, rent, for example, needs to be categorized so it's simple and easy to report, to do analysis, to do trends. And have documentation organized. You know, with systems today, there should be no need for paperwork. Everything is electronic, everything is scanned. Optical recognition you can literally take a photo of a receipt on your phone, and that photo of that receipt gets linked and sent through into your accounting system. So there should be no excuse not to have the documentation. If you have a VAT audit or a SARS audit on your taxes, you've recorded all the information electronically, categorized correctly. Audits become very, very simple. And obviously, your financial year in audit with your auditors. Make sure that the documentation is organized. Shouldn't have to be printing and filing. Everything can and should be stored electronically. And establish a routine. Again, going back to the time and how valuable and important our time is as entrepreneurs. You still need to, and you have to address the back office, the bookkeeping. Get into a routine. Know that at the end of the day or at the end of the week, using the correct accounting system, it's all sitting there waiting for you to literally click a button. But if you ignore it and you say, well, I'll get to it next week, I'm chasing this, I'm doing that, or I'll get to it in a month end, the truth is you actually never get to do it. And then suddenly you're in a panic. It's financial year end. The auditors and your accountants are asking for stuff. You're behind in your tax returns. And that's purely because you didn't allocate the time once a day or whenever it might be to go into your system, spend that time checking what's happened during the course of the day, approving what you need to approve, and moving on. Sometimes we don't really understand and appreciate the difference between separating the personal and business finances. I did speak about it earlier, but it should be top of mind. It's very tempting. There's a nice honeypot there that you need to dive into because you suddenly need some cash for an unexpected expense. Take the cash, must be recorded as it's a loan against you as the business owner, but ensure that if that cash is going out, up-to-date real-time cash flows to make sure that as and when you've got that expenses to pay, that cash is available. And regular reviews of your financial information. Again, it doesn't help looking at it at the end of the month or at the end of the quarter, and definitely not at the end of the year. It's way too late for you to make informed business decisions. With technology today having all data real time, you should be analyzing your financials on a regular basis and tweak and adjust your business accordingly. We now bring it all together in terms of, well, how do I do this? And I've been speaking the whole session about cloud-based accounting software. There are so many benefits to it. It's just incredible. A little background, I mentioned, or I forgot to, but I mentioned, during the presentation that in previous life of mine, I was involved in a business where we were developing property management and accounting software. And I'm saying this was 20 plus years ago. So we thought we were very good and very special because we were solving a problem for the property owners and the property managers. We would provide a rent roll, and then directly integrated into the rent roll was a general ledger system. And it was fantastic. And on top of that, what we offered our clients was a bureau service. So we had these big, expensive, chunky servers down in Springfield in Durban. And our clients, through a virtual private network, a VPN connection, used to come and access their data on the servers that we used to have. Very expensive, very difficult from a service provider to make sure that we've got the robust backups and security in place. And it was a very chunky system because it was limited to, the financial system was limited to what we had built within the property management system. Today, it is very, very different. Nobody even talks or thinks about features and functions within these systems. They are all built today. There are core systems that are core general ledger systems, which then integrate with fantastic apps, which specialize. If you're in manufacturing and you need a bill of materials, there are apps that you can bring into these cloud-based accounting systems that are specialists in manufacturing and bill of materials, and they integrate. And they're very cheap, and they're very light, and they're very, very easy to use. You don't need to, depending on the size of the organization, the levels, the different levels of security and access into your system. Remember, your data is telling you everything about your business. You should not have it open for people to take. It's like money. It's like gold within your business. You need to have adequate layers. Cloud-based does that for you. Most of these systems sit on clouds like the Amazon Web Services, which have got a multitude of security systems in place. A big risk and a big danger within the businesses is not having backups of your information. So you're running your business on Excel, and you're an Excel wizard, and it's sitting on your hard drive, and you've never backed it up anywhere, and your hard drive crashes. You've got no backup of your business. Similarly, with the old systems like Sage and Pestle, where you would actually physically then need to actually go and run a backup. Today, with cloud-based accounting software, you're not thinking about that anymore. It's done for you. It's automated. Going back to a couple of years ago, the cost of running your own IT environment was significant. You needed to buy hardware, the cabling, the routers, the various types of software. With cloud-based accounting software, all you need is internet access, nothing else. As long as your phone, the apps that the accounting system today that you can literally run off your phone. I mentioned earlier, you can take a photo of a receipt, come home that night, it's sitting on the system just for you to approve, and it's auto posted. So your cost of actual hardware to run systems today are minimal. Historically, you would have to pay quite a hefty initial fee for the software and then annual license fees. These systems today are super cheap, and it's pay as you go. You pay for the month. If you've had enough and you want to move on, well, you're not committed to any future contracts or any future costs. And to get real-time information, most of these systems are integrated into the banks. Your bank statement is your source of truth of entry into everything that happens in the business, because the transactions moving in and out are all going to go through the bank statement. If you've got real-time access to downloading your bank statements into your financial system, so you can see who's paid you right now, These type of systems have that. A big thing with software today is scalability and the affordability to how much it costs to actually grow and scale. So historically, you would have to pay per user license, etc., etc. Now, as your business grows, you can just buy more licenses and you start to add apps without incurring the significant costs. So you can manage your business in a certain way, but with growth, these type of accounting systems help you scale. We spoke about the real-time financial insights and also the integration, which is really, really important to know. It's really not difficult. There's some excellent information out there. And the guys are so smart today. It's not really it's not a question of getting integration between a bill of material system, a warehousing system, and an accounting system. That's all the super clever guys have done all of that. It's all presented in data. It's your ability to extract that data and to interrogate it to make informed business decisions, not on emotion, but on the fact. And data is fact. So let's try and bring it all together and say, well, what did we learn today? What are the takeaways? Let's see how we're doing here for timing. Accurate real-time financial records will certainly lead to better decision-making. Must separate your personal finances and your business finances. It's never too late to implement a cost-conscious culture. You'll be amazed if you haven't looked at it before, how much you can shave off the top just by taking the time and just by installing that day after day and living that day after day yourself and the staff within your business. These cloud-based accounting softwares, they are designed and made for small business. You don't need to be an accountant. You definitely don't need to be afraid. Everything happens behind the scenes. You just need to click it. You need to generate an invoice. You need to generate a payment, and everything gets done for you. And in conclusion, we can say that data at the end of the day is the reality. Financial information is prepared based on the underlying data. That's the end of my presentation. I think guys from Ort, if you're happy, we can open up for questions.
Yes, happy to. Thank you so much, Paul. And one of the things that your data is your reality, but one of the things that I'd like to add to that is you cannot measure what you cannot manage. And thank you. Thank you for your content. It's been absolutely incredible. Anyone have any questions for Paul? Ariella?
No, I was just actually I liked what you said because it's one of our pillars, one of our strategy about manage. You know, we cannot manage. It's exactly what we always preach, and I also liked, you know, something that you said, Paul, about the mindset that needs to be part of the organization as a whole, but for individuals of looking at how you save is really important. I mean, it's something I was messaging Eileen and saying, you know, it's really something we've been trying in organization, and it's not something that needs to be taken lightly. I think it's really important. I think it was excellent. Thank you so much, Paul. I think it gave us really you know, for us who have an accounting system and all that, it's given us a good reminder, but I think it also was very good for basic. And I feel like we need to have like a follow-up kind of to delve deeper, but that's something we can speak to Eileen, but I don't know if there's any questions from I think there is some stuff on the chat. Forex implications for South African business and its accounting. It's a question from Rob.
What is the question?
What is your comment on Forex implications for a South African business and its accounting?
Well, where is the business domiciled? So what is the accounting, the currency that you're reporting on? So if you're a South African-based company and you're exporting, you would be taking your rands, you would be buying your raw materials in rands, you're then selling and receiving dollars, You would then need to do, when those dollars are coming in, the conversion, or the bank would do that back into rands, and you report your business in rands. So it very much depends on where the business itself is domiciled. The difference between what you budgeted or what you costed your product at, if you import in, and the actual founded landed cost will and can vary due to the exchange rate fluctuations. And if it's a purchase, that exchange rate fluctuation gets debited as an expense to the income statement in the time incurred.
I think maybe, Rob, since you're here on the call, if you want to maybe give more details to Paul and see if that answers your question. Can they unmute, Tracy? Can Paul?
They're
Can
able
Rob
to
unmute?
themselves.
Oh, okay.
No, still on mute.
Okay.
You know, so important for us today, Paul, is the fact that we have such a variety of guests in this call today. Not only object businesses, but mentors, and the questions that you've answered today, that I think were burning questions in everyone's mind, have been so relevant across the different sectors of people on the call today. One of the things that we can't stress enough at Orjet, and we see it time and time again, is how many small businesses dig into business finances for things like the emergencies that you spoke about, and how important it is to keep your financial business and personal separately. So that is such a nugget, and I just want to stress how important it is to keep that top of mind in your business.
Tracy, I see a question that from two people asking
Yes.
about, maybe Paul, if you can talk about cloud accounting systems that you were talking about, maybe giving some examples of those that you have used and seem to be working well.
So the one that I've used the most and I find is fantastic is a system called Xero, Xero, Xero Accounting. That system was built about 25 years ago in New Zealand by an engineer who just couldn't have the patience to actually learn the journal entries and the debits and credits. So what he did is he built this accounting system called Xero that took care of all the transactions behind the scenes. So over 25 plus years, that system has evolved and developed into a very light, robust system today. So that to me is a fantastic system. I use that within my businesses. There's others like QuickBooks, but I can't necessarily comment in detail on the others. I can comment very much on the Xero accounting software platform. But again, I would need to come back in terms of others, but I'm biased towards Xero, knowing how fantastic that system works, how affordable it is. The simplicity, set up and configured correctly, really makes your life so much easier. You know, I mentioned earlier, you can take a photo of a receipt. There's an app called HubDoc that Xero integrates with, that's sitting there when you come home at the end of the day and you've allocated that time to process your accounts for the day. It's sitting there, literally is a click of the button. Similarly, the reconciliation of bank statements. These accounting systems like Xero integrate with all the South African banks. So all day, every day, the bank statement in Xero is being updated live. Come the end of the day, you've got your bank recon done. You literally just got to click a button to then get those transactions reconciled. So Ariella, I do need to do more research in others, bearing in mind that I am biased towards a system called Xero.
I think that also maybe to look at sort of a general recommendations when you do look at the software to implement in your company, whether it's for HR, whether it's for accounting. They always try to pull you in with the free plan, but then you need to see what actually this free plan entails, and then looking at the costing does this platform allows you to have more than one user when you get a license? What are the options? What is the options of the different plans? When you obviously you need to do a little bit of analysis of exact needs that you need to have on from a, let's say if we look at the accounting system, because we've been going through looking at different options for the from solutions for digital software for HR, for booking, for various things, and we found it quite challenging because the companies are trying to draw you in, and then when you start looking deeper, you need to look at understand your needs to see which is the best platform to use. But I think it would be great if you could maybe give a sort of a presentation on things to look for when you are looking at software. We can introduce you to Zoho Books. We're using Zoho Books. I'm not saying it's the right one. Again, it depending on the need of the companies. I see there's also a question from, I'm not sure who it is, about BackaBuddy or crowdfunding options for capitalization or emergence pivot a business. Interesting question from Philip. I don't know if you need more information to answer this question.
Not an expert, so
Okay.
wouldn't want to start to guess or assume. I mean, I've tried some crowdfunding for a business I have in Zimbabwe. Hasn't been successful, but I'm not an expert, so I'm not qualified enough to comment on GoBuddy or crowdfunding initiatives. Sorry.
But it's definitely something you can't rely on for capitalization, because I mean, Eileen, you can probably comment on that as well. Yeah.
So all I can tell you with crowdfunding, so with crowdfunding, it's a lot of work. It doesn't just come. You need to put in a lot of effort, a lot of time, a lot of marketing. Crowdfunding is a marketing exercise.
So Helena, it's actually, I mean, it's what we were covering in today's presentation. I'm looking for partners, looking for funding is really, really important to help you grow your business. You can grow it yourself slowly with the profits that you're making, but to be able to take your business, let's say from initial a startup business, you're looking for that initial seed investment, and that's a different marketing and financial strategy when you're looking then after seed money for your first level of additional debt funding. But all of that starts with accurate financial information that you can present, and whether you're presenting it to crowdfunders, whether you're presenting it to the bank, whether you're presenting it to investors, that's the starting point. The marketing is how the entire business package, the pitch deck, is then put together. But the confidence of any potential partner investor starts off with clean, accurate financial information where the business owner knows the business, knows the numbers, and is able to talk through the numbers and the details substantiating and backing up those numbers. So it doesn't matter where you're going to, the principle of how you package it is the same.
Absolutely agree. I don't know if we have the chance. Sorry, I see that Lisa was saying that her biggest challenge has been cash flow. So maybe if Lisa can give a little bit more input that Paul can give feedback, maybe that can help.
I think I'll try and answer Lisa anyway. And Lisa, I mean, it's a massive problem and it's super, super difficult. And you've got to start at the top of the business and you've got to look at your sales. Your sales less your cost of sales. Because is that giving you enough profit to then cover your day-to-day expenses? So the starting point will look at the turnover. You've got to look at your pricing. Are you pricing correctly? Can you possibly do a price increase on your product? Because that immediately should start to generate additional cash flow, because your costs of that product are still going to remain the same. But if you can improve the markup, and I know it's very, very difficult to do that, but sometimes you need to, we spoke earlier, and Ariella mentioned it earlier, you need to measure. So you need to take a specific product or a specific initiative or a specific store, do the price increase and see what happens. Quote your services at slightly higher and see whether that has an impact. It's measure and track. Then the second one would then be looking at the cost of that purchase. Are you getting the best deal? Are you able to go to your supplier and say to your supplier, can I get terms? Or if I pay you up front, can I get those purchases a lot cheaper? There's nothing wrong with credit, and I come from a credit environment, provided it's used correctly and responsibly. It can be extremely helpful in growing a business, as long as I said, you're responsible. So Lisa, you've got to analyze your whole business. You've got to see where your leakage is coming from. Because if you're not able to generate positive cash flow at the end of the month to pay your fixed expenses, it's extremely stressful and very, very difficult. But you've got to analyze your business. You've got to understand all the levers, and you've got to look for the opportunities within your business where you can start to cut costs, and that filters straight down into your cash flow.
Yeah, absolutely.
It's not a silver bullet. Sorry, Lisa, it's definitely not. It's a combination of everything together, and it's not a quick exercise, but it's got to be the sum of the parts.
Yeah, so I think thankfully we're not in a situation where we can't, meet our monthly expenses. It's just we import our stock from overseas, so we've got huge containers that we bring in, and so it's sort of chasing our tails to pay those containers, which we have already thankfully. My husband negotiated a very good deal with the factory where we have good payment terms, but I think it's the selling off of the stock and having the money and time to place the next order. That's kind of we manage it fairly well, but it's still, I think, where and why we're going to just join the program is to just get better advice on how to manage that, so that we're not constantly chasing our tails.
Yeah.
In terms of such cash flow difficulties is what I'm saying. So I think we're in an okay space, but it can be drastically improved. Our overheads, our fixed monthly expenses are not huge. Our big expense sits really in the ordering of stock and the timing of stock and making sure we have enough stock on our floor when we need it, selling it off at a quick enough rate, and of course forecasting is a big thing as well. And just the current economic situation in South Africa and people price hunting and sort of supplier hopping is just, of course, always a challenge. And we bring in our products from overseas because the quality is better than what we've found locally. So it's just a constant juggling act, and I think it's just really understanding the financial side of it better to make better decisions.
Yeah, absolutely. And so when you've got the data recorded, you can start to look at the trends. So forecasting is very, very difficult. But as time goes by and as things, it's never predictable. But, if you've got a trend is always going to be your friend in terms of what to be able to do moving forward. So the more information you've got to analyze assists you better in doing those forecasts. And there are trade finance houses out there that do this as a living, that help you, in terms of importing. So there are other angles to consider, provided you've got sufficient margin to be able to pay that expense.
Yeah, absolutely. So we constantly, of course, relooking that and that sort of thing, and ensuring that our margins are good enough, which they are. We work on pretty good margins. Like I said, I just think we're at a space where we need to improve. We need to grow. We need to expand, but we need the right advice. We are not. I'm not a business person. I joined recently, my husband, so it's all quite new to me, and this is why we need sort of the guidance and support. My sister is a CA, so she is very helpful as well, and we do have an accountant that works for us. So it's not as if we're completely in the dark, but I don't feel comfortable as a business manager, if that makes sense. I come from a marketing background. This is kind of new to me. I did accounting at school. That was a long time ago. I hated it and I was very bad at it.
I'll ask you a question, Lisa.
Tell me.
So
Ask
you say, yeah, your margins are pretty good.
Yeah.
Is that fact or is that emotional?
No, it's fact. It's fact. I know.
Perfect.
That I do know. I don't know nothing about our stuff. It's just I could be better, but I know that we work on very good margins. So we have that, and we do them according to products, and our margins are good.
Fun.
And that's it from me. Thank you.
Thank you, Lisa. Any other questions before we close off today? We still have a couple of minutes. But what I would like to say is that it's a very exciting time in the year for AltJet. We start our business boot camp next week, which runs through the whole of August and the first 2 weeks of September. We have 14 incredible modules in the bootcamp series and have further introduced new facilitators, new content. So for all the businesses that are online with us today and for the mentors as well, of course, if there is something that you'd like to join, I'm just going to pop the calendar into the chat. I will also attach it to the presentation that Paul shared with us. But please join us. The knowledge that you're going to receive is invaluable. Paul, thank you so much for your time. It started off as this morning and it went into the afternoon. You were absolutely incredible. Had nothing to be nervous about. Now you're so familiar with this. We're going to be calling you for the next webinar. And to all our guests, we look forward to seeing you online and live. Everyone is thanking you, Paul. We do have a feedback poll that we're going to launch right now. It's just a couple of questions, always taking into consideration that we really appreciate the feedback that we get from the people who join our training sessions. It enables us to bring you new content based on your suggestions all the time and to keep being relevant, topical, and most of all helpful. So when you have completed the couple of questions, you just click on the submit button, and we thank you all. Paul, we will see you soon and look forward to working with you again. Thank you.
Thank you, Tracy. Thank you, Karen. Thank you, everybody from Autumn. Thanks for the opportunity, and thank you, everybody, for taking off an hour of your time to listen to this presentation today. Thank you, everybody.